And so we will get started in just one moment. So I'm happy to begin as people are continuing to join. Thank you for joining us. My name is Dan Osuski, and I am the Chief Research Officer at the International Foundation for Valuing Impacts. And we're very pleased to have you join the information session for our exposure draft of the General Methodology 1 Conceptual Framework for Impact Accounting during the public comment period that we have running until October 16th. I'd like to share with you the agenda that we have for our session today. We will begin with some welcoming remarks from our chair of the VTPC, which is the governing body that oversees the impact accounting methodology. And then we will provide a bit of an overview about the work that we're doing overall to introduce this important concept before diving into the particular draft statement that we have out for public comment right now, which is the General Methodology 1. We'll highlight a few particular questions that we are looking for comment and feedback on during the public comment period to give you a sense of the types of important questions and topics that this document is grappling with. And then we'll provide some instructions for you on how to provide your feedback because we really do welcome it. At the end, we'd like to offer you a little bit of context around where we're heading next so you can continue to follow along and support and provide feedback on this work. Then we'll have some closing remarks from the vice chair of our VTPC, Sonia. And so again, thank you for joining. And with that, I would like to hand it over to the chair of the VTPC, George Serafin.
Dan, thank you very much, and thank you all for joining today. It's a very exciting day, and as Dan said, let me just double click on the comment that we very much invite your comments, participation, perspectives, as we are thinking about how we can make impact transparency and impact accounting a very important part of accountability structures inside companies and inside markets, and how we can make impact accounting a useful tool for decision making within business. So just to say briefly, hello from myself. I'm George Serafin. I chair the Evaluation and Technical Practitioner Committee, and I would like to welcome you all in this webinar of the General Methodology 1 Conceptual Framework for Impact Accounting public comment period. In this session, as Dan mentioned, the technical staff of the International Foundation for Valuation on Impacts and the Value Balancing Alliance will share with you the details of the exposure draft General Methodology 1 statement that is now available for public comment. If you haven't already reviewed it in detail, I really highly encourage you to do so and to provide your feedback prior to the close of the public comment period, which, as a reminder, it is October 16th. I think this publication represents a very significant milestone in the field of impact accounting, impact measurement, and impact management more broadly. It represents the first joint publication of the two organizations, the IFVI and the Value Balancing Alliance, and serves as the foundation for future publications to establish a credible and comprehensive impact accounting methodology that is independently governed by the Valuation and Technical Practitioner Committee. Impact accounting rests on the beliefs that our current methods of corporate and investor decision making, which are based on financial accounting, which is a fantastic innovation over the last 100 years, are incomplete because we're missing part of the picture. And to address the limitations of an incomplete picture, it is necessary to be able to measure the impacts that sit alongside risk and returns in decision making. And just as mechanisms to measure risk and return have been developed, it is necessary to be a recognized and equivalent methodology for impact accounting. The impact accounting methodology that is produced by the IFVI and the VBA partnership and is governed by the VTPC is a public good and aims to build off and complement the work of many initiatives and organizations that have done fantastic work over many, many years and that are also directly involved in its development. Among them is the work that we started a few years ago on the Impact-Weighted Accounts initiative at Harvard Business School, which I helped found in 2018. At the time, the initiative aimed to prove that impact-weighted accounts or impact accounting was valuable, practical, and feasible. And I'm very, very proud to say that proof of concept has largely been achieved. At the same time, for impact accounting to achieve its vision of a just and sustainable economic system based on the true contribution of business to people and the planet, it is necessary to move beyond a proof of concept, continually improving and transitioning towards a credible, comprehensive public good methodology. And this partnership between IFVI and VBA and this draft publication is the first step towards that vision. We're pleased to share it with you and again, welcome your feedback during this public comment period in order for all of us collectively to continually improve it. Thank you very much again for joining, and Dan, I will pass it back to you.
Thank you very much, George. And I'd like to introduce Michael Verbuchelm, who's the Director of Methodology for the Value Balancing Alliance, to give us a bit of an introduction to the overall methodology.
Thank you, Dan, and also welcome from my side. So definitely want to introduce the methodology, but also quickly the partnership between IFVI and VBA, since we teamed up and joined forces beginning of this year to really develop a globally applicable impact accounting methodology to really move forward with that as a public good and to really build a methodology that then really promotes also a new way of decision making or allows for a more complex, complete picture on decision making here. So really trying to have that to orient the economic activities towards well-being and improving well-being while also safeguarding the natural environment. And out of this partnership, this is really the first output, the first publication for the public commenting that we're quite excited to share that work now. And when it comes to the methodology itself, so what is it actually? We try to measure really with impact accounting, the social value that is either created or destroyed also by corporate activity. And then not just looking at the own operations, but really across the value chain. So for us, as we define it in the exposure draft that you can review, is a system for measuring and valuing the impact for corporate entities and generating impact information to inform decisions related to sustainability performance. And as also George mentioned before, we somehow envision this, that the impact accounting is complementing the financial accounting and really giving the complete picture here as we are missing out on a very essential part. And having that now with a first step in the methodology development. So really trying to generate information that is fundamentally influencing investors and corporate decision making. So how does it actually work? Let's zoom in a bit. And especially when it comes to the impact accounts, you would follow these 4 steps, as you can see on the left-hand side, to really understand your sustainability context and go into the identification of those impacts by really building on the different topical methodologies also that we will basically release now step by step, and that help to measure and value these impacts by using standardized impact pathways. And then looking at the materiality of those and the magnitude to really like aggregate those to the impact accounts, which then really leads to the impact information that then uses not only like a common unit for measuring the financial and impact information, but also uses that's kind of like common units to identify trade-offs and to really make decisions between these trade-offs also across sustainability topics. And also that you really then have the chance to develop like a more comprehensive statement that captures not only your normal profits and loss, but really like an integrated version of that where you can really look at the full picture in that case. And it's the prepare side, either like on the corporate entity level or also from an external perspective when it comes to investors or lenders. And then also when it comes to the user of that information, of course, there's multiple use cases that come with that, either like company internal managers and the other representatives of the corporate entity, but also, again, the financial market as well as other affected stakeholders. Looking a little bit again into like how do we develop the methodology. So that was like the brief overview. How are we structured? And also here, George mentioned already like the VTPC, the key component in like how we actually govern our methodology development. The oversight is basically happening in the VTPC. So here it's like an independent body really established by the IFVI to really reflect all the different stakeholder perspectives on the methodology. And they're overseeing and also approving the methodology outputs that the collaboration, the partnership of IFVI and VBA actually develops. And as you can see also here, we have two major governing bodies, which is on the one hand the VTPC, but on the second hand also like the Due Process Oversight Committee, since we're following a due process protocol to make sure that certain standards are like followed also in the development and certain process steps are followed during the process. So here we have also a Due Process Oversight Committee, and both of those bodies basically have some representatives from both organizations. How is the methodology now developed? So on the one hand, we have the technical staff, as for example, Dan, Ryan, and myself are part here of really making the actual like content work happen also. So it's really like the combination of the two teams of IFVI and VBA to collectively work on the methodology, but beyond that, even also work on guidance documents, thought pieces, etc. And on the other hand, we have the VTPC that directs, validates, and approves not only the work plan, but also all the work methodology outputs that we see. And as mentioned before, it somehow is like a combination of like the representatives or like the nominees from both sides, from IFVI and VBA, to make sure that we really capture like all different stakeholder perspectives here when discussing and approving the work plan, but also the methodology itself. How does this due process actually look like? It's founded on like a few principles that you can see on the right-hand side. And first of all, it's impact focused and stakeholder informed, but it's also strongly like based on the principle of collaboration, not just within the partnership, but really beyond, and like trying to connect the impact ecosystem here to like get feedback also from your end when it comes to the public commenting period, but really like it's a collaborative process in like how we develop the methodology. And of course, it's also guided by the principle of transparency, like making clear how we come to certain decisions and how we basically also then incorporate the feedback that we receive. So it starts with establishing the work plan and initiate the different projects based on that work plan, which needs to be approved by the VTPC on an annual basis. And then we, as the technical staff, together with like the dialogue on the VTPC side, then develop the methodologies so that those then also can go into stakeholder consultations and also then the public exposure. And not only that, we also want to, of course, test it because it's important that it's also feasible. So it's an integral part of like having the public exposure and like a piloting exercise, really like giving the full feedback then so that we can finalize the methodology in a sense that then can be approved and basically then gets issued. So that's the general gesture here of the development process. Handing over back to you, Dan.
Thank you, Michael. And so I would also like to encourage all attendees to please share any questions that you have in the Q&A function during this webinar. We will try to carve out some time at the end to verbally respond to some of those questions, but we'd also love to be able to respond to some of them live time. And so please do so. I would like to now introduce the research manager on the IFVI team, Ryan Dalton, to give you more of a deep dive insight into the General Methodology 1 statement itself.
Thanks, Dan. Hello, everyone. As mentioned, my name is Ryan Dalton. I'm the research manager. It's my privilege to go into some of the specifics of the statement itself. So I'll start with a summary level of GM1 of the exposure draft. I'll then go and provide a section by section overview, talking about some of the specific proposals that are made in the document. And then lastly, I'll describe some of the proposals that we're requesting feedback for. We're requesting feedback for 5 proposals. I will jump into 2 of those proposals. So to start at a summary level, the General Methodology 1 provides guidance on the methodological components that are generalizable, and it sets out the concepts necessary to develop a comprehensive and coherent system of impact accounting. So what that means is the general methodology is a component of the total methodology that focuses on the cross-cutting components. So it would be the industry or sector agnostic components of the methodology. The exposure draft is the first statement in a series of statements that will comprise the general methodology. It's still under determination how many series or how many statements will be a part of the general methodology, but it's important to note that this is only the first one of those. The general methodology applies to all of the topic and industry-specific papers that we will develop over time and are currently in the process of developing. But it's important to note that no content in the general methodology will override guidance that will be published in the future in those topic and industry-specific methodologies. And to provide a little bit of context, really, the bulk of those topic and industry-specific papers, which we are writing and will write over time, will detail specific impact pathways to measure and then value the impacts of corporate entities. The objective of the general methodology is threefold. It's in many ways for the technical staff and IFVI and VBA to develop the system of impact accounting and enable us to write and draft topic and industry-specific methodologies that are based on consistent concepts, definitions, methods, and principles. It's also designed to help the users and preparers of impact accounts. So first, or the second part, is to assist corporate entities and investors to prepare impact accounts based on consistent approaches, so it produces comparable information, and also to assist users of the impact information to understand and interpret the information that's derived from impact accounting. So I'll go through section by section and hit on some of the key proposals. But before doing that, I wanted to provide a high-level perspective of how the document is organized. So it has 5 sections, and then a glossary, which has defined terms, which, as you'll notice, are italicized the first time that they are in the document. The introduction section describes the purpose, presents a long-term vision for impact accounting, and describes the architecture of the methodology, how the different pieces fit together. The purpose and applications of the methodology, the different use scenarios are described in Section 2. Section 3 introduces the qualitative characteristics. Those are really the principles we use when drafting methodology and also during the construction of impact accounts. In 4, we'll discuss the fundamental concepts. So this is the core machinery. These are the building blocks that enable the system to come together and calculations and impacts to be measured and valued. And then in 5, we'll describe impact materiality and how it informs the actual preparation of impact accounts. So in accordance with the due process protocol, the statements in the exposure draft are proposals. The proposals are determined by the technical staff of the VTPC during the drafting process, and they're subject to change based on feedback from the public comment period, and will be subject to final approval by the VTPC. Those key proposals are listed here on the right. These are some of the most important ones that while we were writing the methodology, really wanted to build on the groundbreaking work that's been done in the impact management ecosystem, but then also design a coherent and comprehensive impact accounting system that's truly usable, that corporate entities and investors can use the information they currently collect, plug into this system, and measure their impacts in a scalable and cost-effective manner. In order to do that, we've made a few key decisions, which are on this slide. So within the statement, the first key proposal is simply the introduction of the system of impact accounting, which will be developed throughout the methodology and will establish the statement establishes the key concepts, principles, and definitions for that system. 2, the statement, the exposure draft states the purpose of impact accounting, which really serves as the foundation for the entire methodology, and critically establishes monetary valuation as the unit of impact accounting, in that all impacts in the impact accounting system are measured in monetary terms. It sets impact materiality as the basis for impact accounts, focusing on the significance of impacts on the affected stakeholders. The exposure draft delineates between preparers of impact accounts and users of impact information. I'll go further into that in a minute. And it establishes the impact pathway as the foundational building block for measuring and valuing impacts. And as I mentioned, impact pathways will really form the bulk of the topic and industry-specific methodologies, how to calculate and measure those impacts. Several bodies of work informed the methodology, and in particular, the GM1 statement. Those 3 bodies of work are shown in the slide. The first is the impact management ecosystem and a lot of the foundational work that has been done by organizations such as the Impact Management Platform, Social Value International, Capitals Coalition, Value Balancing Alliance. The second body of work is the sustainability-related disclosures that are required by international standard setters and governing jurisdictions. We lean heavily on these and think about them as a source of connectivity to our own methodology to make sure we're utilizing metrics that are already collected, measured, and disclosed by corporate entities in the calculation of impacts. And third, as we're developing a coherent and complete system of impact accounting that we think will complement and supplement financial accounting, we leaned heavily on the conceptual frameworks for the 2 main systems of financial reporting, that would be the IFRS and US GAAP. So jumping into now a section by section summary, we'll begin with section 1. Section 1 is the introduction section, which describes impact accounting, which, as Michael defined, is a globally applicable system for measuring and valuing the impacts of corporate entities on people and the natural environment. The first section introduces some key concepts, definitions, methods, and principles, and states the monetary valuation as the unit of impact accounting, so measuring impacts in monetary terms. It presents the long-term vision, how we think impact accounting will develop over time. And then I think this graphic here presents at a high level the architecture of the methodology, which is under development, but presented at a high level here, where the general methodology underpins the topic and industry-specific methodologies, speaking to the cross-cutting components And then the standardized impact pathways are developed at the topic and industry-specific level. The next section is section 2, where we describe the purpose of impact accounting and the various applications of its use. So the purpose, which I will read here, is from paragraph 17. The purpose of the methodology is to produce impact accounts and generate impact information that enhances decision-making by entities and investors related to the sustainability performance of an entity. Another proposal in the exposure draft is the definition of sustainability performance itself, which is here refers to the effectiveness of an entity in reducing negative impacts and increasing positive impacts. There are a few key terms here that are defined in the glossary. Impact accounts, which is the aggregation of various impact pathways that measure and value the impacts of an entity. Those are the impact accounts. From impact accounts, you derive impact information that could take various different forms: an integrated profit and loss statement, a summary by stakeholders of different impacts, that would be impact information, and then all of it together being impact accounting. The section 2 also describes a distinction between preparers of impact accounts and users of impact information, and provides a non-exhaustive list of the various use cases for impact information to inform decision-making. With those various scenarios and use cases in the document, you'll see organized by the different users, the managers of an entity, investors, and affected stakeholders, each of which have different use cases for impact information. Section 3, we propose the qualitative characteristics of impact information. These are the principles we use in all components of the impact accounting system, but more specifically to inform the preparation of impact accounts, and then the disclosure of any impact information derived from impact accounts. And the principles are flexible enough to apply to both of those scenarios, and are something that should be considered as a corporate entity or investor is going through the process of preparing impact accounts and impact information. The characteristics are adopted from the ESRS, European Sustainability Reporting Standards 1 document general requirements, and also from the IFRS S1 general requirements for disclosure of sustainability-related financial information. I will note that the fundamental qualitative characteristics are faithful representation and relevance. These are probably familiar to many people. The enhancing qualitative characteristics are comparability, understandability, and verifiability. We'll note that timeliness from the IFRS general requirements S1 is not included. We then, and another important proposal that is made in this section is under the definition of relevance, and in particular describing how impact materiality is an entity-specific component of relevance. What we mean by that is that when a preparer of impact accounts, an investor or an entity, has identified an impact, they've measured and valued it, that preparer needs to know, how should I decide whether or not to include this impact in impact accounts? We have listed here 3 different questions or perspectives to consider when making that determination. So the perspectives of impact materiality or relevance are developed and proposed in section 3. They are the 1, the capacity of the impact information to influence the decisions of the users, the need for transparency as a public good and accountability towards affected stakeholders, and the 3rd is the significance of the impact on affected stakeholders. And in that 3rd one is where the impact materiality perspective of affected stakeholders is made clear. So those are the 3 perspectives one would need to process and think through when determining the materiality of an impact. Section 4 is, again, the core building blocks and machinery of impact accounting. It's the concepts that someone would need to know on a cross-cutting basis to prepare impact accounts. So we define several fundamental concepts that are necessary for impact accounting, the most important of which is impact. So the definition of impact is in paragraph 47. The definition here is a change in one or more dimensions of people's well-being directly or through a change in the condition of the natural environment. An impact can be actual or potential, intended or unintended, positive or negative. What I would highlight here is we take the perspective of the well-being of people. So we take an anthropocentric perspective in the methodology. We also lay out our use of impact pathways, which, as I've mentioned several times, is the primary tool for measuring and valuing impacts. They're the logic chain that relate the inputs, activities, and outputs of a corporate entity, the things that are happening from the business side, to the outcomes and impacts in the real world. And then lastly, as we think about the perspective of valuing impacts, impacts can be valued from the perspective of the affected stakeholder. How much does it cost the consumer or the worker? Or from the perspective of the enterprise itself. In the methodology, as we develop impact pathways, they will be valued from the perspective of the affected stakeholders, so that when combined with financial accounting, provide a comprehensive view of the societal value created or destroyed by an entity. The last section is section 5, where we establish impact materiality perspective for determining whether to include an impact in impact accounts, as previously mentioned. Something that is worth calling out from section 5 is that we describe impact materiality as an entity-specific aspect of relevance. So what we mean by that is that the determination of impact materiality is specific to each entity. So that would require the preparer of impact accounts, whether it's an entity or an investor, to assess on their own merits within the company or as the investor whether certain impacts are relevant. So it really places the burden on the preparers of impact accounts to ensure that they provide a fair presentation or a comprehensive assessment of impact. As a result, the methodology does not include mandatory impacts or a uniform threshold for impact materiality. And when a preparer concludes that an impact not covered by our methodology is material, it is to provide a fair presentation, it is incumbent upon them to develop a calculation of that impact to include it in impact accounts. Again, the whole idea is to provide a kind of comprehensive evaluation of sustainability performance. So lastly, I will go through the exposure draft. We have identified in the explanatory note at the beginning of the document 5 questions. There are 4 specific questions, and then 1 open-ended question for feedback. So I will go through 2 of those questions, but the rest of the 5 questions are laid out very clearly in the beginning of the exposure draft. So the first one relates to this distinction that we've made between preparers of impact accounts, those that prepare the information, and the users of impact information. So we propose that the preparers of impact accounts are entities themselves or investors from an external perspective. We note that when preparing from an external perspective, there may be certain data limitations. And as we develop the methodology, we attempt to help bridge those through guidance in the methodology. The exposure draft of General Methodology 1 states that preparing impact accounts, as I just said, may have limitations due to not having access to primary data of the entity. The reason we raised this question, made this distinction, is because a challenge in identifying the preparers of impact accounts is that the institutional infrastructure for impact management and impact accounting is still under development, the work that we're doing. So it's not clear exactly what the future state will look like for impact accounting. We could envision, for instance, 2 different scenarios, one in which entities prepare and publicly disclose audited impact statements every year, or a world in which corporate entities disclose sustainability-related disclosures, primarily metrics, and then investors prepare the impact accounts externally to inform their own decision-making. Because the development of the institutional infrastructure is unclear, we wanted to, as we're drafting the methodology, make it both accessible and usable for managers inside an entity, but then also investors outside an entity. So to make it flexible. So the question that we are requesting feedback on do you agree with the proposal to separate the preparers of impact accounts and users of impact information in this way? why or why not? And if not, how would you delineate between the preparers of impact accounts and users of impact information in a different manner? The last question I'll highlight is question 4 in the explanatory note, which relates to impact materiality and the qualitative characteristic of relevance. So as I mentioned, to prepare impact accounts, a preparer must determine which impacts to include in impact accounts. The exposure draft of GM1 addresses this need by applying an impact materiality perspective, specifically an entity-specific aspect of the qualitative characteristic of relevance. What this means practically is that when preparing impact accounts, the preparer should consider the 3 perspectives that I mentioned that are in section 3 in paragraph 26. Those 3 perspectives, again, being the ability of the information to influence decisions, the need for transparency as a public good and accountability towards stakeholders, and the significance, scale, and scope of that impact on affected stakeholders. Impact materiality is, again, entity specific. So, and the entity materiality varies for each entity, and the methodology itself does not require any mandatory impacts or contain a uniform threshold. So the question is, are the paragraphs in this section clearly written? Do they provide clear guidance on how to determine whether to include or exclude an impact from impact accounts? If not, which paragraphs are unclear or ambiguous, and how might you enhance their clarity? Do you agree with these 3 perspectives for determining relevance? If not, which perspectives do you disagree with and why? And 3, do you agree with defining impact materiality as an entity-specific aspect of relevance for the purposes of impact accounting? Further, do you agree with the proposal to not include mandatory impacts in the methodology? And I think with that, I believe I'll turn it back to you, Dan.
Thank you very much, Ryan. And so, as I think you all in the audience can tell, the purpose of this information session is to give you all some context about the work that we're doing, and then most importantly, walk you through the most recent publication that we've created that, as George said, will serve as the foundation for the work that we're doing moving forward. All of which to address and acknowledge, as Ryan said, that this is in draft form. This is a proposal. And your feedback is essential for us to carry this work moving forward. And so I want to highlight the way in which you are able to provide your feedback on the draft that we've developed. And so we encourage and invite comment letters from any interested stakeholder. And so anyone is eligible to provide input, and we will review all of it with the support of our VTPC. We've, as Ryan shared, developed a handful of very specific targeted questions to guide some of the feedback that we've received, but we also welcome feedback on all components of the methodology itself. We've developed a few items of specific guidance for how we'd like to receive this feedback. It is not in the form of a survey, and so you are welcome to draft your feedback in a letter form in the format that you'd like. But to the extent possible, we request that you consider and prioritize the particular questions that we have developed. When you're providing any feedback, provide very specific identification of which paragraphs or sections of the content you are responding to. Give us a strong and clear rationale for your suggestions as possible. And really help us point out where there might be areas that are still ambiguous in the potential interpretation for us to consider how we can continue to clarify the work that we're doing. And then finally, constructive suggestions and proposals on how such improvements could be made is always welcome and encouraged to really enable us to incorporate your feedback as directly and thoughtfully as possible. We do want to acknowledge when you produce these comment letters, they will be a matter of public record, and so they will be published on our website at the closure of the public comment period, along with, once we have a finalized draft or version of the General Methodology 1 statement, a basis for conclusions and content from us, the technical staff, and the VTPC, acknowledging the feedback that we've received and how we've gone about incorporating it in the updated version. And so all of the content is available on our websites, and so you could go to ifvi.org to access the full draft of the statement if you have not seen it, and you can send your comment letters to research@ifvi.org via email with the subject line referring to the public comment in that email. We will include those links in the chat of this webinar, so you have direct access to them in this moment as well. Before making sure that we have the opportunity to respond to some of your questions, thank you all very much for sharing those questions, and I know we're responding to some of them as we go. I do want to share a bit about what our next steps are. And so, as has been acknowledged, we are focused on the theoretical foundations in the general methodology right now, but we will and are in the process of developing the more prescriptive, topical, and industry-specific methodologies that we will have a handful of those topics prepared later this year for the aim of having public comment periods beginning in the early 2024. But just as importantly, we acknowledge that the development of this impact accounting methodology will continue to occur on an ongoing basis this year, next year, and beyond. And so all of this is to acknowledge that we're working on the theoretical foundations now. We are beginning work on the topical methodologies, and we'll have them for availability at the beginning of 2024. And we really encourage you all to continue to follow along and provide your feedback as we go, as we will continue to have public comment periods for each of those releases. And so with that, I'm going to take an opportunity for us to address some of the questions that have come in the chat, and so we'll pull some of those up. Ryan and Michael, if there are any that you've already particularly seen that you'd like to lift up, you're welcome to come off mute and share any thoughts.
Yes, happy to. Thank you, Dan. There are really like some interesting comments in here, and I'd like to maybe like kick it off with the one that asks about the country-specific methodologies. So to maybe like give a little bit of context here, of course, we acknowledge that for certain countries, the impact coefficients or impact factors will definitely have like variation. So that's something that we, of course, take into account when it comes to country differences. That's not that we have country-specific methodology, but like country-specific components of each topical methodology, or also like when it comes then to the industry-specific ones.
Thank you, Michael.
And Dave, maybe I'll take the one that was just before that and related to how investors are using the data, if that's okay.
Yes, I also believe Michael provided a response. So you're welcome to elaborate on that as well.
Oh, I missed that. No, we can move to the next one then.
So I will share a response, and Ryan, you might be interested in elaborating. There is a question regarding the definition of impact in the methodology, and noting that it is different from that by impact frontiers. What this was a topic that was something that was explored quite at length internally and with the VTPC, and that there are in fact actually many definitions of impact out in the space. And as Ryan alluded to at the beginning of one of his slides, we looked to a number of foundational resources to inform the appropriate definition. And I think the particularly two organizations that we looked at for a definition of impact to inform ours were the Capitals Coalition and the Impact Management Platform, as coalition and networks that have done work to arrive at some broader consensus-based approaches to those definitions. Nonetheless, we are always interested in feedback, and therefore we'll also take a look at that impact frontiers definition to see if there are any particular nuances that are important from that consideration, and welcome that feedback from you all during this public comment period as well. Ryan, would you like to take the question regarding the definition of entities?
Yes. Oh, I see that. So when we say entity, we're referring to the full consolidated entity. However, impact accounts can be prepared. They don't have to necessarily be prepared at the consolidated level. In fact, they can be prepared at the subsidiary level, across different geographies and across different service lines. And as impacts are dependent on and specific to each of those contexts, we envision them being prepared at that level and then aggregated at the consolidated for the consolidated company.
Thank you, Ryan.
We could also, go for it.
Oh. Maybe also with regards to the primary data origin and availability. So that's definitely, of course, something depending on like whether you're like reporting from like a corporate perspective or also from an investor's perspective might differ quite immensely what kind of primary data you have available, right? So here, of course, we are aware that some of those things need to be fleshed out also in more detail. This is like why we also have more details on the quantification and the data parts in the what you also see here in the quantitative methods in the GM2 part. But also, of course, there is a certain aspects when it comes to data availability that are very, very company specific. But maybe also looking at Ryan, Dan, you maybe want to like complement or like.
Nothing that I will add on that question. I can take some other questions. And actually, Michael, would you actually be interested in sharing a response to the question regarding the health care industry?
I'm not sure whether I see that one here.
I will take another question as we look for that. And Michael, the question is referring to why are we starting with healthcare on the industry specific side. But in advance of that, there's another question regarding how our work intersects with institutions and organizations like IFRAG and ISSB in the future, and that we as George outlined at the beginning, really aim to do work that complements and builds off of work that is happening elsewhere in the ecosystem. And so first and foremost, as organizations like IFRAG and ISSB are working on the metrics and the type of data that is required to be reported by corporate entities, we will be developing our methodology that is based off of those expected data reporting requirements and metrics. And in doing so, are really aiming to create some efficiency in the ecosystem and not require the duplication of work for those who are interested in applying impact accounting. At the same time, we do see opportunities for the work that we are doing to be able to influence and support the implementation of those various initiatives. And so we see that as a sort of bi-directional relationship in which we are able to provide provide some support and feedback to them. We are developing a methodology that we believe will be able to help companies meet their requirements regarding some of those expectations, and at the same time, we are building our methodology based off of the work and conclusions that they are making as well.
Now also thank you also for like hinting me towards like the questions. So now also the chat updated on my side, and now I think I'm up to date again. With regards to the healthcare sector and why we start with that one, like simply for two reasons. One is that there is probably like most of the when it comes to industry-specific methodologies, most of the work in the impact field has been done in the healthcare sector, especially in pharma. And also here we have a different level of data availability due to certain requirements also from regulators that we need to have an understanding of the functioning of the product. So that of course gives a very good starting point for exactly that, using that as then also the prototype for the industry-specific methodologies.
Thank you, Michael. And we are, I know we're not going to be able to address all questions that are coming in, and would like to thank you for those questions. I think there are two that I would like us to address now, and then we can take any other comments as follow-ups after this session as well. Ryan, I'd be curious if you'd be willing to respond to a question regarding the difference between impact accounting, impact accounts, and impact information.
Yes, very happy to. So in the preparation of impact accounts, prepare measures using impact pathways, a number of different impacts that affect stakeholders and different places in the value chain. Those are kind of each individual calculations. The calculation of those that result in a monetary figure, and then you aggregate those are impact accounts. So they're kind of the raw data. They're all the measurement. Impact accounts are then used to derive impact information. So impact information could be an integrated profit and loss statement, for example. All of the system together that includes impact accounts and impact information is the system of impact accounting.
Thank you, Ryan. And I'd like to address one last question before handing it over to our vice chair of the VTPC, Sonia, to close us out. There's a question referring to the public record nature of the public comments. And unfortunately, no, it is not possible to disclaim the public record component of the comment letter. It is important, as we are reviewing and responding to all feedback, that in the spirit of transparency, we are able to acknowledge where that feedback is coming from and what that feedback is. And so what I would encourage, however, is attendees to acknowledge that feedback can come from many different types of entities or individuals, and so it could perhaps be possible to associate that feedback with a different level or individual if that makes certain comments more comfortable to be able to share. And so with that, I would like to pass it over to Sonia Haupt, who is our vice chair of the VTPC, to share her closing remarks.
Thank you, Dan, and all. This has been really impressive and a truly pivotal moment in this role as vice chair of the VTPC. We've been working towards this moment for such a long time. So thank you very much for pulling this off to the team. And thank you, as you've been all listening and commenting already. I was quite impressed by the quality of these comments and questions, if you allow me to say that, already showing such a high interest and a high level of engagement that will only help us move forward with the required speed. Having said that, I'd like to ask you, as you've been listening in, to please structure your comments and thoughts in the formal feedback with that caveat on publications, as Dan just alluded to, but it will be ever so important to capture these elements of your thinking in the public commenting period, helping us to further improve the work that has been done so far. Some of you may know that in my day job, I'm heading impact valuation at Novartis, and in that role, I've been experiencing the power of impact accounting, measuring and valuing impacts firsthand over a few years now. So that has been predominantly on a company level, on an enterprise level, but emerging thoughts are clearly there from an investor perspective as impact really hopefully becomes the mainstream also in their thinking as they complement risks and returns. Now, these benefits are really widespread, and it is about insights, it is about initial awareness, but prospectively with higher adoption, it will be more and more about impactful decision making, both for companies, both for investors, but of course, aggregating it to a benefit to society at large. So having said society at large, we're working towards a standardized public good methodology. So as such, your inputs will be super important to really ensure the practicability, scalability, credibility of the work that is done. So please do take the time to help us improve with your comments, be it just on wordings, be it on your thoughts on what else needs to be captured, or on the elements of maybe where you feel we need to be more succinct in the language. But allow me to take the moment to thank the team. When I came into this role, there was this moment where I believe you all remember and said, like, are you sure you're pulling this off in that short time frame? And you sort of said, yeah, and you did. So thank you for that. Thank you for that. It's super timely that this is happening. I think we just come in at a moment where the pool for impact accounting is taking off, is getting stronger and more tangible almost by the week. So this work is anticipated increasingly. So thanks for pulling this off in time. And again, to the audience, please do provide your comments by October 16th. It will help us improve, and it will help you making impact accounting the tool that you've been waiting for so long. So with that, I'd like to thank you already for your contributions and to the team for your hard work across the Atlantic. Thanks a lot.
Wonderful. Thank you, Sonia. And so again, please provide your feedback. For any further questions that you might have, also feel free to use that same contact information available in the chat, research@ifvi.org. We're available to continue the conversation, answer any questions, and look forward to hearing from you. Cheers, everybody.